Good evening, and thanks for joining us today from wherever you are. I think this time of day we've probably got UK and European clients, so thanks for joining us. Great to have you here for our third webinar of 2025. If you've missed any of our previous webinars going back a couple of years, they're all available on our Joseph Mews YouTube channel, and each session focuses on various aspects of property investment, whether it's location, tax, lettings, all different topics there, which are good to have a look at, and they're there to have a look at as and when. My name's Andrew Siegel, and I'm the managing partner here at Joseph Mews. Pleased to be joined by Raj Bedi. He's a director at Martin & Co here in Birmingham, and they're one of the leading letting agents here in the city. And we've been working with them 10, 11, 12 years, I think. So we'll get some really good insights on the lettings market and why Birmingham is so strong. I'm going to give you a little bit of background on us, Joseph Mews, and give you just a couple of slides on where we are in terms of the UK property market, and have a look at why the UK is the most invested market for property investments in the world. And I'm going to show you one of our latest releases, which is being launched on 20th of March, to get a sneak preview. And again, we're sort of building and developing in terms of what the market wants, what investors want, and of course, what tenants want. So we'll have a look at that. I'll introduce you to Raj. He's going to then go through into deep dive into the Birmingham rental market. We've got a Q&A session at the end. Should be a little box on your screen there. So any questions, please fill in as we go through, and we'll answer those at the relevant point or at the end with Raj, and cover everything off there as well. Our company was founded by Andy Foote. He's our chairman. He's the guy on the right. His journey began after a challenging experience in 1999 buying off-plan property. There was a lack of communication, and it was not a very transparent and not a very supportive experience. So this experience prompted him to create a sort of better and more customer-focused approach to property investment, ensuring that clients from around the globe, we've got offices in different parts of the world. We don't develop in different parts of the world, but it's to support investors investing back into the UK market. So we give them the care, support, and guidance that they deserve. As we've evolved, we've become a sort of distribution partner for major developers in the UK. We've transitioned into what we are today, which is Joseph Mews, and we partner with various developers and property firms, and it just enables us to access the best opportunities available in the market, which ultimately benefit our investors. Next slide, please. Clients often ask us how we got our name. So Joseph was Andy's son, and unfortunately in 2008 he lost his life to brain tumour. Cut a very long story short, Andy set up what was a small charity, which has now become the largest brain tumour charity in the world, raising tens of millions of pounds. And it really has made a huge, that research that money is funded has made a huge difference into patients' quality of life and of course outcomes. So very proud of that, and the name represents and reflects us, Andy, his son. If I can, next slide, please. So as I mentioned, we've been around quite a long time, and we've delivered over 3,500 actually units successfully delivered. We're up to about 40 developments now in terms of marketing stuff that we're launching at the moment. We have a very large amount of clients that repeat, and in fact one of our webinars was how to build portfolios. So we have a lot of repeat purchases, and we've delivered over £500 million worth of apartments and of units to clients. If I go to the next slide, please. I think probably what we've developed and probably what we're most proud of is the partners and developers that we partner with. And there's some household names there like Knight Frank. They're a global real estate investment management company. They help clients build, manage, and invest in commercial, industrial, retail, hotels, residential properties. They provide investment management services to retail and institutional investors, and they have a huge research arm where they share a lot of data. Very proud of that partnership. They turned over £500 million last year, and they chose us to represent different developers in different regions, because we do all the sales and marketing for Knight Frank's development. The others, the one I'm going to talk about a little bit later on, is the Elevate Group. They're Birmingham based. Again, been going a long time. In fact, our chairman and their chairman go back about sort of 25 years. They've delivered over 1,000 apartments in Birmingham alone. So we've got very, very strong partners that we've worked with and nurtured over the years. We get a lot of developers that come to us wanting us to sell their product, because selling's the easy bit. It's all the customer care and everything we do behind it that's important. And we turn down a lot of developers because maybe we're not too sure of their history or their funding or the locations that we're building. And as you'll see, it's all about choosing the best locations in the UK to invest in. If I could have the next slide, please. Clients love us because we're sort of end to end in terms of the customer process. So we'll work with reservations. We'll get you to exchange, so exchange on your property. We'll get you to handover, completion, after sales, all the customer care at the back end. So lettings with trusted third parties like Raj, mortgages, furnishing. So we're a one-stop shop for our investor clients, which is good. And we're a one-stop shop for the developer. So the developer just gets on and builds and develops. They're happy with that. That's their specialist. Our side is the customer care and all the support going on. So we're not just an agent that's up for some commission, then we run away. We're here to support you through to completion and beyond, and resell in the future. So we're there, and we've got a big, strong team to support our clients throughout the journey. If I could have the next slide, please. Thank you. Just a reminder, any questions, you can drop them in the box there, and we'll cover as we run through, or at the end, wherever's appropriate. Yeah, myself and Raj will be on the panel there. If I could have the next slide, please, and the next again. I'm old, been investing in property since I was 19, and we've got the market is such a strong market. But before I go into a couple of little slides there, just a little poll question. How do you feel about the current UK property market? So we'll get a couple of buttons there to click on. So how do you feel about the current UK property market? Are you optimistic? Is it a good time to invest? Are you cautious? Are you waiting for market trends to stabilize? Or are you uncertain? Just help me sort of steer the presentation and hopefully make it a little bit more interactive. So tick a box there, and we'll see what you ladies and gents are saying about or how you feel about the market. Okay, so okay, keep that up for me, Callie. So, okay, brilliant. Optimistic. Now is a good time to invest. 13% of you. Thanks for that. Cautious, waiting for market trends to stabilize. Uncertain, need more insights before deciding. Okay, all right. Well, that's interesting. I think the market's never been so strong, and maybe I'll cover that in the next couple of slides when we look at the market. So yeah, I think we'll cover that as we go through in terms of why today or tomorrow is a good time to invest. If I could have the next slide, please. Okay, so I mentioned we work with the likes of Knight Frank, Savills, JLL, big multi-billion-dollar pound PLCs in the UK. We do, of course, a lot of our own research, all backed up by Office of National Statistics or the PLCs. So historically, if we look back to 1977, on average, property prices double every 13 years. So, and that's a trend, which you'll see in a second, that's set to continue, is set to continue for very important reasons: supply and demand, etc., and the number of new builds or the number of builds that aren't being built. So we'll come on to that. You might say, I know some of you are cautious there, you might think, is the property market going to crash? Am I going to buy today and the property price is going to drop tomorrow? I'll caveat what I'm going to say in a minute. As you can see, we've got a nice, steady rise in pricing. Now, 2007, 2008, of course, we had the financial crash, for those that remember. And yeah, the only time really you've taken a small hit, maybe 8, 9, 10% in property prices. But guess what? It was short-lived. I bought at the top of the market, paid top dollar, prices went down. It doesn't matter. I've still got those properties. They've trebled in price since then. So as long as you don't have to sell, and as long as you've got a tenant, it doesn't matter. Whatever happens to the property market, we all need somewhere to live. Property prices changing, your tenants aren't going to walk out and go and do anything else. So we've got to look at over a long term. By long term, I mean these days, taxes, stamp duty, and other bits and bobs. You really want to look at sort of a 5-year hold. Obviously, if you need to exit sooner for whatever reason, of course you can do that. But we want to be looking at a minimum a 5-year hold to get the most from it, because we want to look at rental yields, of course, capital appreciation. We want to look at both. At the end of the day, this is all about the mathematics. If I go to the next slide, please. Again, all good news. Again, I'm old. I've had property when the interest rates were 15%. Yes, we were at an all-time low a few years ago. We're down to 4.5% base rate, according to the mortgage brokers that we work with. We're expecting to see a reduction there as well. So again, pretty good at the moment, and we're expecting that to fall a little bit further as well. Next slide, please. Okay, again, mentioned we do a lot of research. These are from your big 3 PLCs. So this is from December 24, taking their 24 reports. JLL, Knight Frank and Savills. Again, house price growth is expected to accelerate. And again, we're seeing it every single month. Even last year, when property prices were forecast to be flat, we had like 0.5% and small growths month on month. Never flat, always increasing. And again, house prices, and we'll see why that is in a second. But the future is really good because, as I say, we need somewhere to live at the end of the day. It's it's the gift that gives on giving. And I've been in property, and I've never known it in terms of the supply and demand dynamics. It's never been. It's not good if you want to get on the property ladder, but it's the best time if you look at supply and dynamics to be a landlord. Next slide, please. Okay, we're headquartered in Birmingham. So why Birmingham? And why is Birmingham the smart choice? So let's have a look. So Birmingham is the second biggest city in the UK. It's nice and centrally located for those of you that maybe haven't been to the UK. Second largest city, as I say, and it's got all the fundamentals that we'd look for as a property investor. Because as you saw earlier on, you stick a pin in the map, and property prices have doubled every 13 years. Well, with a bit of research, we can outperform the market and do a lot better than that by looking at these key fundamentals. Next slide, please. Okay. Again, I haven't gone into this. I'm going to go through Birmingham in a minute. It'll be interesting to see what you guys think. What do you think is Birmingham's biggest investment advantage? So we've got, do you think it's strong rental yields? Do you think it's high capital growth potential? Major regeneration projects? Economic growth in job opportunities, or all of the above? And then again, with the next couple of slides, we'll go through key elements that as investors, we should all be looking for. So the biggest investment advantage: rental yields, growth, regeneration, economic growth and job opportunities, or all of the above. You just click on one of those for me. That'd be great. Thanks, Kelly. Okay, interesting. Only 7% are saying strong rental yields. We'll come on to that with Raj. No one saying high growth potential. Interesting. Loving this. Major regeneration projects, 13%. Economic growth, 20%. Okay, this is the one. All of the above, 60%. Okay, so thanks for that. And let me go through kind of what's behind, if you like, all of the above. So what we'll look at is investment potential. So Birmingham's population is over 1.16 million. It's expected to grow to 1.24 million by 2030. So we've got lots of professionals in and moving to the city, and I'll explain why that is. We've got a large student population, whilst our sort of the tenants that rent the apartments aren't necessarily, we aim at the young sort of city centre professional. These students are leaving the university, going into work, and they're becoming the young professionals. Again, looking at all your reports, property prices in central Birmingham are forecasted to grow by 24% over the next 5 years. And huge demand. I'll come on to the demand because that I think is one of the most important factors, particularly when we look at Birmingham in more detail, and look at the limited and look at the numbers. We can look at what's in planning. You can see for yourself what's driving price increases and, more importantly, the rental. And Birmingham has the second highest gross value added GVA. So in terms of business and output, it's by far and away the second city, surprise, surprise, after London. In fact, to the next slide, please. So, talking about supply and demand, this is quite interesting. You've got, and in planning at the moment, for the next decade, there's only 18, it sounds like a lot, but there's only 18,500 units in planning. Now, that's in planning. Some will fall by the wayside. So that's only 1,800 new homes, dwellings a year. So there's only in planning 1,800. So current housing target is for 4,488 homes per year. So the long-term average delivery historically has only been 2007. So we need 4,488. We've only ever been delivering in recent history 2,700. And then when we look at what's coming, we've got a massive undersupply because in planning at the moment, there isn't enough homes. Now, that's kind of as the market is at the moment. You've got roughly 12,000 graduates, half, 24,000. So half of the graduates are working, living and staying in the area. So there's 12,000 homes potentially needed then. Not everyone's renting, not everyone's staying in the city centre, but it gives you a good idea of the number. And then we've got each year, you've got 7,500 people now, forget HS2 coming, 7,500 people leaving London and migrating to London. Birmingham's the #1 choice for people leaving London in terms of where they go. And hopefully you'll see that in a minute. So you've got much, much higher demand than other key cities, such as Manchester. In Manchester, you have quite a lot of house building, but not a lot of commercial building. And Birmingham's the other way around, as you'll see from all the companies that are flocking to Birmingham. There's tons of commercial, which is great because it means jobs, and I'll cover that in a second, but not a lot of housing, 1,800 units per annum over the next 10 years. That'll ebb and flow. Some will fall by the wayside and some new ones will come. But even if you look back historically, we've only ever, from 2013 to 2023, we've only been delivering the 2,700 and we need nearly 5,000. Next slide, please. Thank you. So if we look at the outlook, again, looking at the Midlands, Birmingham versus the UK average, as I mentioned, we're outperforming the UK average. And interestingly, everyone thinks London's a great place to invest. Average price in London, 680,000. Average rental returns about 3%. It's just not the one if you're looking for capital appreciation or rental yields. So coming further north gives you a lower price point, better rental yields, and more scope for that capital appreciation. So again, we've got nice, steady growth and growth that's outperforming the rest of the UK. So again, we can make our money go further. If I have the next slide, please, Cal. We talked about the economic growth and sort of what's going on in the market. And again, Birmingham is on fire. You've got Goldman Sachs, Deutsche Bank have been there for quite a long time, PwC, KPMG, and they're not a two-man band or a local office. These are UK, international, or global headquarters. I'll show you some of the pictures. PricewaterhouseCoopers taken a whole block. BT have taken a tower for 4,000 people. The high-speed train people are there, thousands of people. HSBC have left Canary Wharf, half of their business. They're in Birmingham. So the economic growth is spectacular. And as I say, you've got the major corporations, including the Inland Revenue, they're putting a national hub here. It's phenomenal. So we've got massive shortage of housing. We've got all these companies have or are physically relocating there. So you've got massive employment opportunity, lower cost of living, definitely, better quality of life. Birmingham's phenomenal. And as I say, you've got the employment opportunities, you've got this migration, and you've got high earners, 70K plus moving from Birmingham to London, and that increased by 20%. So they want the nice, slick city centre apartments in the right location where they can walk, work, rest, and play. It's all done on foot or by tram. So again, all part of the fundamentals that make Birmingham, I think, one of the best places in Europe to invest at the moment. Next slide, please. Okay, so massive projects. If I start top left as you look at your screen, that's the Bullring Shopping Centre. That's the bottom of the Bullring. That's Selfridges. So that's their flagship department store. You've got Harvey Nicks, and you've got all the department stores you get in London. The only other place you get them all together is Birmingham. Second visited shopping centre in the UK, the Bullring, by footfall. We go across the road. You got to the right. You've got Grand Central Station. That's the new train station. If you went to the train station in 2014, 15, arguably the worst train station in Europe. Now, after tens of millions, hundreds of millions, it's like it's integrated with the Bullring, with the shopping mall, and it's like an airport lounge. You've got champagne bars and smoked salmon, and as I say, it's integrated to the rest of the city, all undercover, joins the Bullring. To the right, we've got a very modern building, which is right in the heart of the city centre, which is the library. It's the largest library in Europe and the largest public space in Europe. Fantastic building. I think it's very unusual, sort of gold and black. Next door, you've got the juxtaposition of the old town hall. It's great. It really is like London, where you've got old and new living side by side. We go down a row, in the middle row on the left, that's Arena Central and Paradise Circus. 17 office blocks recently constructed and people moving in now. And that's where your PwCs are, your Ernst Youngs, and the Inland Revenue. Middle picture there is Curzon Street. So that's the high-speed train terminal. That's going to make, it's bad enough now with the shortage of property. High-speed train, when you're, instead of an hour and 21, you're 49 minutes to London. It's like being on zone 2 or 3 or 4 in London. That will make a huge difference. Yes, it's going to be over budget. Yeah, it's going to be delayed. It's like grand designs, it'll happen. Construction is well underway. It's probably, I was chatting to an investor who's an HS2 risk manager who's invested with us, and he wouldn't quite tell me all the details, but at least 3 or 4 years late, we think. So probably early 2030. But it's happening. Construction is 40%, maybe 50% complete. Phenomenal. Make a huge difference. Then you've got to the right again, that's the Arena Central, where you've got HSBC's new headquarters, amongst others. Drop down a row, we've got the trams. Again, new tram in place, fantastic. Pound to get all across town, goes out to Wolverhampton, goes out to, it's being built to take to the HS2 station. So again, you've got that communication link in place. In the middle there, we've got Snow Hill Wharf. Snow Hill Wharf is the largest speculative commercial development in Europe and outside of London. Phenomenal. Again, seats about, I think, 15,000 office seats. Speculative, all let out. That's where BT are, and that's where HS2 are. The bit on the right is a sort of 40-hectare site. That's called Smithfield Market, and that was the old wholesale market. Wholesale market's moved out by the Aston Villa Football Club. That now land is cleared, and that's £1.5 billion project, as you might be able to tell, with the greenery, lots of public realm, galleries. The planners have been to all the like Las Ramblas in Barcelona, and all the outdoor markets. It's going to be really will change the face of Birmingham. So, and that's coming. So HS2 is coming, trams are there. So what we like about Birmingham from an investment point of view, there's a lot happened, there's a lot happening, and there's a lot more to happen, which is what we want to see as an investment. So I think anyone would be mad if they don't think that this isn't going to have a huge impact on the second biggest city in the UK. Next slide, please. Thanks. I mentioned the universities. You've got 5 top universities, plus all the teaching staff. And of course, as I mentioned, 49% of those graduates, when they've come to uni, end up working in and around Birmingham, and they're going on to all these different jobs. And Birmingham isn't, it's gone from its industrial days. Yes, we've still got Jaguar Land Rover, but you've got Gymshark, you've got the tech companies, you've got the Ernst Youngs, IT, and manufacturing as well. And got very much in Digbeth, you've very much got a creative district and a creative area as well. Next slide, please. Okay, thanks. And again, we're in the middle of the country, so the rail network's good. There's already 80 trains a day now to London in about an hour and 21 minutes. Obviously, high-speed train will make a huge difference. There's only one stop on the high-speed train, that's at the airport, and the next stop is in London. So again, you've got the airports, you've got the main motorway networks, you've got the rail network, you've got HS2 coming, and you've got the airport, which has, I think we got 150 destinations, 70 odd airlines. You can fly to Dubai, America, etc. So really is well connected. Next slide, please. Okay, I'm just going to do a few more slides on the development just to give you some idea of the kind of things that we're building, and then we'll go over to Raj, who'll talk about the rental market in Birmingham. So I'll have the next slide, please. Very pleased to have this one. It's called it's out and it's called number 30 St Paul's. It's in St Paul's Square. It's actually the bottom part of the jewellery quarter. So it's between the jewellery quarter and the business district and the main central area of Birmingham. However, it's an old Georgian square. It's beautiful. It's listed. It's protected. It's low rise. And it's it's the Mayfair, as I think we'll see on the next slide. It's the best location in Birmingham city centre. If I go to the next slide. So it's actually these are the 2 buildings. Number 30, you can see on the left-hand side, you've got the original Art Deco building. And on the right-hand side, you've got the modern building. It's in St Paul's Square. So as you'll see, I think from some of the later shots, you've got in the middle, it's a nice big square with little independent shops, bars and restaurants all around the square. We've got 1 bed starting from 250. You put a 20% deposit down now, in a month or so, and then the 80% the balance is on completion. Q1 next year. And again, we're seeing over 6% average rental returns already for ordinary stock. This is, as I say, the best address. Just to the left of the picture, the owner of Gymshark has a penthouse there. It's just a beautiful area, which was originally a manufacturing area. As I say, it's like a village, but inside the city centre, because as you can see, it's very green. So good rental yields. What we've done for investors, we're quite lucky here. Everyone says they want car parking. 90% of what we do in Birmingham city centre doesn't have car parking for various reasons, including planning. Mayor wants to keep cars out of the city centre. However, there is an underground entrance, which you may or may not be able to see underneath the building on the right-hand side. And we've got car parking spaces. However, in Birmingham, car parking spaces are £20,000 to £40,000. It's good to have. So what we're doing is we're not selling the landlords, the investors, a car parking spot. You don't have to buy them. But if your tenant, and Raj will come on to this, I'm sure, and talk about parking in the city centre and in this particular location. If your tenant wants parking spot, they can rent them or lease them for £100 a month because, as I say, it's really unusual to have that. And a lot won't want the car parking because it's a young city and very much a sort of walk to work, walk to the pub, walk to your work environment. But again, it's a nice little touch, which is a little bit different. Back up the next slide, please. As I say, we're saying it's the Mayfair of Birmingham. It is the best address. So whatever happens in the world, if you're investing in Mayfair, particularly if you invested years ago, you know you're going to be safe. Birmingham, you're always safe there because it's the address in the city centre. I can have the next slide, please. Okay. We've got more detailed maps and we didn't have a chance to get everything together, but you can see hopefully where it says St. Paul's Square. So all the things I mentioned earlier, all the businesses, there's 9 Michelin star restaurants, by the way, in around that area. The main station at the bottom is Birmingham New Street. Off to the right is the HS2. You've got Snow Hill Station to the right. You've got the Jewellery Quarter Station. So you have to trust me when I say all those key areas are the central business district and the main part. So it's in the core of the city centre. All the things I talked to, arguably apart from the HS2 terminal, which would be a slightly longer walk or a tram ride away. They're all those offices, the HSBCs, the Ernst Youngs, are all there within walking distance. And to give you an idea, which I'll do tomorrow, and I did last week, to walk from New Street on the bottom there, the main station as it is at the moment, to St. Paul's Square is about a 10-minute walk straight through the city centre. So couldn't be more centrally located, but in that quiet, tranquil area. Next slide, please, Cal. Okay, so again, you've got the older building on the left, Art Deco. We're keeping the facade, the new build behind, and then the building on the right, again, we're keeping the facade, more of a modern building. In the middle, it's kind of like a C shape. The building in the middle is going to be kept by the developer that joins it, if you like, and we're going to have the lettings and management, property lettings and management office there as well. And then, as I say, you've got a C shape with a courtyard in the middle, which we'll see in a minute. So if I can have the next slide, please. So behind the 2 blocks, on the left and the right, got an internal courtyard, underground parking with lifts up to all the floor. Every apartment, there might be the odd one on the ground level. Every apartment has a terrace or a balcony, either facing out on the square or inward facing into the development. And in the middle there, you walk down like a spiral loop. So you can walk down to the car parking, or you can get a lift, as I say, to all the floors. So you're on the square, which is tranquil, but you've got your own sort of inner sanctum, if you like, within the development. And the developer's well known for doing these sort of areas within the development. And here, fortunately, there's the space to do that. If I can have the next slide, please. So again, we've got videos, but this gives you an idea of the sort of the fit out. It's very high end, super luxury. The developer's got, as I say, delivered over 1,000 apartments in and around the area as we speak. So we've got show flats and videos so you can see the real thing. If I can have the next slide, please. Again, we can do furnishing packs, and Raj will come on to about what you should and shouldn't be doing to get the most out of it from a rental lettings point of view. Next slide, please. Thank you. Okay, bedroom. Yeah, again, all top quality appliances. This is the square that it overlooks. Very green. Got the church in the middle, and all around the edge is this development. Shops, bars, restaurants, hotels. Very upmarket area. Next slide, please. Okay, some more pictures of the square. Our offices are in the square, developers' offices in the square, the developments in the square. And as I say, we're pleased to be involved with Elevate and fantastic track record, and headquartered in Birmingham and delivered over 1,000 homes in the city centre. So very stable and secure company with a lot of assets. Next slide, please. So I'm going to hand you over to Raj, who's going to talk to you about the Birmingham rental market. and then I can see we've got some questions, so we'll cover that a bit later. Thank you.
Hi everyone. My name's Raj. I'm the director of Martin & Co. We are a letting agent in Birmingham. We cover the whole of Birmingham, but our main focus is on Birmingham city centre. So I'll discuss with you the rental market and how it's currently performing. Could I have the next slide, please? So we're going to start off with a poll question. So if you could put your answers to what is your biggest concern when it comes to renting your Birmingham property? So if you could select one of the answers of finding reliable tenants, void periods, maintenance and repairs, and managing tenants from overseas. So we'll just give you a bit of time to select one of them answers. Okay, so finding reliable tenants is come up as the biggest concern. What I'd say to that is, as an investor, you'll have a letting agent, and part of their job is to find the tenants, and within finding tenants, a big part of that is the referencing process. So, for example, we follow a very strict referencing process, whereby we do uh, a previous check with the landlord, we do a credit check, and we do an income check. Not just checking that the tenant is earning enough income, but also that their job's permanent, how long they've been working there. So it's basically quite stringent process, and it's to kind of avoid getting bad tenants. Obviously, you can never guarantee anything because it's just a snapshot of what a tenant's like on paper, but it gives a good idea to whether you want to accept that tenant or not. Void periods is next. Okay, again, I can see why this is a concern. Fortunately, in Birmingham, it's a very, very buoyant market, and properties are renting very quickly, and the average void period is just a few days. So that shouldn't be too big of a concern. Maintenance and repairs, I get it. I understand it more on an older property. You know, if you've got an old terraced house that was built, 60, 70 years ago, and maybe it hasn't had been refurbished in the last, say, 15 years or so, then maybe you might get more repairs. But buying a new build property, the beauty of that is you've got your 10-year structural warranty, and the developers normally offer a 1 or 2 year warranty, which is brilliant because it means any issues and it's sorted for free, and within that warranty period. After the warranty period, we can get quotes from local contractors, and get anything repaired on your behalf. Managing tenants from overseas. So I get, if you're an overseas landlord, you're thinking, well, how am I going to deal with tenants while I'm, thousands of miles away? But that's the whole point of having a letting agent manage everything for you and deal with the stress of the day-to-day management of a property. Next slide, please. So obviously Birmingham has gone through massive rental growth, so I started working in the Birmingham market in 2012, and from about 2012 till 2020 there was growth, but it was steady growth. Rents rose year on year, but nothing major. You might, get £20 a month more each year on your rent. But then since COVID and 2020 to now, the rents have just gone through the roof. A number of reasons for that. One being supply and demand, and there being a lot of demand and not enough supply of property. Another big one is rising mortgage rates. Obviously, yes, the mortgage rates are now going down, but mortgage rates are still high for a lot for the average person getting on the property ladder. A young professional, they'll look at the mortgage repayments, and buying a property won't be affordable for them. Obviously, they've got to save up quite a big deposit as well. And I guess it's just the ease of renting. It's a nice, easy process compared to buying a property. They've got the flexibility of not being kind of locked in with a mortgage, and if they want to only rent for a year, they can. That's making renting very, very popular. Average asking rents across Birmingham have increased 14% over the past year. So yeah, like I said before, the rents in the last kind of 5 years have gone through the roof. And yeah, year on year, properties just increasing in rental value. And not so much previously, but yeah, since the turn of COVID, the market's gone really hot. There's a shortage of high quality new build apartments in Birmingham. And what that does is any premium new build apartments, it kind of puts a premium on the rent. Um, and the reason that there's not enough high quality new build apartments, part of it is the available apartments are, a lot of them are the older buildings that were built kind of early 2000s, and these buildings are now tired. The spec is from 25 years ago, so they're outdated, and so obviously tenants are becoming a bit more picky. They want, more luxury. They've got more income to pay for that luxury, so that they are wanting the highest quality apartments, and they're willing to pay a premium for that. There's a lot of build to rent activity. What build to rent is it's basically if a large pension fund or developer, they will build or buy a block of new build apartments in, say, somewhere like Birmingham. Might be 200 apartments, it might be more, and they, instead of selling the apartments, they'll keep it, and they will retain the development, and they will rent it out. That's what build to rent is. In build to rent, in that sector, um, deals outside of London account for 90% of total spend, with both Birmingham and Manchester having the largest build to rent pipelines. What that tells you is if these pension funds and big corporate institutions are wanting to invest in Birmingham, and they see the growth in Birmingham, you know that there's some degree of feeling safe, because these big corporate companies, they're doing a lot of research into the city and statistics and analysis, so you kind of know that if they're spending money in Birmingham, there's obviously a reason for that. Birmingham is the youngest average population in Europe. Big part of that is the high retention rates of students. So, the students that when they graduate, they typically stay in Birmingham. And that is a big driver for the rental market. And what you'll find in Birmingham city centre is it's a young professional market. If you go to the outskirts, it's more families with children, and you're more 3-4 bed houses, whereas city centre is more 1-2 bed apartments, and it's young professionals that want the city centre lifestyle, the social life, being close to the bars and the restaurants. Have the next slide, please. So as I was saying before, there's a big demand for premium new builds, and there's a lack of quality apartments, because a lot of the apartments are now, 20 odd years old, and they're a bit kind of, not up to the standard that a lot of the higher end tenants want these days. Communal areas are a bit tired, and the tenant or applicant walks in on the viewing, and initially they see the communal areas and it's a bit dated, and the apartment is maybe not to a high spec, so tenants, they are willing to pay a premium for the new build apartments. Birmingham is expected to be the second strongest housing market in terms of rental price growth after London. and there's increased demand driven by the students and the young professionals that are looking to return to Birmingham. Typically graduates, they may stay, graduate and get a job in Birmingham. Sometimes they move back to their home and then they come maybe a year or two later. Um, Even from other universities, you find that a lot of people, they went to uni elsewhere and then they still move to Birmingham after, because Birmingham geographically it's right in the middle of the UK, so it's the main city for a lot of other kind of local towns or smaller cities. So it's known as the probably the place where you would relocate as a young professional. Average annual growth of 3.6% and cumulative annual growth of 22.2% for rental growth over the next 5 years. Could I have the next slide, please? So Andrew's going to come back and we're going to do a Q&A session, answer any questions that you have about the market in general, or lettings, or the development on St. Paul's Square.
Thanks, Raj. That was really good. Yeah, we've got a lot of questions in, so thanks for those. I'll go through those in a second. Well, a couple of things I want to pick up on is the voids. Our chairman's had 15 properties in Birmingham for 25 years, so that's through COVID, Trump again, Brexit. The worst void he's ever had in any of those apartments is 2 weeks. Voids, you don't have to worry about it. If you just Google property shortage in the UK, all over the BBC, on average, there's 17 to 25 people, renters, looking for your house or your apartment. I know we had a lady, we got a development up in Wakefield. She put a house on for rent, and this was October, 840 requests for viewing, 3-bed house, quite unusual for the area. So don't need to worry about void, and that's what we, and more importantly, Roger's here for, because there's certain things we can do just to make sure yours sticks above everyone else. And it doesn't matter if it doesn't anyway, we'll rent them. The market, everyone's clamoring for the units. Something on the build to rent side of things as well. Some say, oh, there's a new build to rent scheme. So as Raj said, you've got Lloyd's Bank, you've got the institutions coming to Birmingham. Why? Because they know that they can rent out their 200 units. And as we saw, I think the figures were there's 1,800 apartments, dwellings in the city centre in for planning every year, but the requirements for 4,000. This is what that tells you all you need to know. This is why the institutions are moving to Birmingham and to a lesser extent Manchester. More build going on in Manchester, different sort of supply and demand dynamics. So again, and as Raj said, it's lifestyle choices as well as financial reasons. As a landlord, I've never known the market ever so strong. Okay, so I've got some questions which we'll run through, and keep them coming if you've got any more as we go through. One from Luke. Thanks, Luke. How do you think the second half of the Birmingham regeneration project compared to the first half, and how will they impact the property market? Well, we've got actually, we'll have some things you can order from us later, but we've got a big sort of a PDF coming which talks about the HS2 arena, paradise, all the things I talked about in terms of the regeneration. So as I mentioned in my presentation, there's a lot that's happened and there's more to come, and the icing on the cake will be HS2. So we've already got a lot of people coming in from London and the surrounding areas, lots of regenerations. I think I might have mentioned 9 Michelin star restaurants. Birmingham hosts the second most pop concerts in the world. So it's just going to add to that problem of shortage of stock. Not a problem, if you're a landlord, so it's perfect. So yeah, it's just going to carry on growing and growing, and we're still at a low price point. I actually live in Bristol. Something 300 grand in Birmingham is £500,000, comparing like for like in Bristol. So can I see Birmingham 300,000 going to 600,000, £500,000? Yeah. Can I see that in Bristol? Possibly, but you don't have anywhere near the amount of regeneration going on. You certainly don't have HS2. So yeah, it can only get better. We're struggling now with everything that's coming, going to make a huge difference. Mr. Anonymous, does Joseph Mews have options or partners to support new investors with mortgage or tax advice? 100%. We'll have a little thing you can fill in at the end, and we'll contact you depending on what you're looking to do. And yes, we have third-party mortgage brokers that we work with for onshore, offshore, all different types of investors that know our developments, that know Birmingham, and that know the investor market. And same for tax advice as well, and limited company structures. So again, we've got independent, fill in, click on a thing at the end, and then we'll be in touch, and we can put you in touch with someone that can give you the right advice, because that's a regulated business and out of our jurisdiction, but we can point you in the right direction. Let me give one for you, Raj. Hi, Raj. What are the main changes in the Renters' Rights Reform Bill, and how do you think the bill will affect the rental market? That's from Anil.
Okay, so that answer, it could be very, very long, but to give you the main one of the biggest changes of the Renters Reform Bill is that there's going to be no more fixed term tenancies. So tenancies will essentially be rolling from day one. So it just gives the tenant a bit more flexibility, because they're not committed to a 6 or 12 month tenancy. So I mean, there is a lot more to it than that. That is probably just one of the big ones that I'd mention. But yeah, at the end of this webinar, there's an option to kind of pick, like, to have an appointment with me or Andrew. So if you want to find out more, just select that option, and we can discuss it in a lot further detail.
Thanks, Raj. Another anonymous attendee. I think I've covered this, but I can't stress how important it is. So I'm just going to mention it again. My concern is that if Birmingham increases the volume of new build apartments over time, that will impact on supply and demand, in turn impacting capital appreciation and rental yields. Hopefully, I've explained that. We should be building 4,400 apartments a year. In planning is only 1,800, so massive, massive shortfall. Then you've got, what were the figures? 12,000 people from university staying in the city. Then you've got 9,000 people migrating from London. It's got the worst supply probably in UK. So again, you haven't got to worry about that. And when we look at all the regenerate, then we look at HS2, when you're only 40 odd minutes from London. Can't stress how important that supply and demand dynamic is. Just Google as well. Go on the BBC, housing crisis, housing shortage. We should be building 310,000 new homes a year. We've only ever built 200,000, whatever Conservative or Labour say. We'll never catch up. And Labour now, yes, they said they wanted to build 1.5 million. So far, they're actually given less planning and less licensing than Conservative did. So it's just getting worse. Population by 2034, 2035 is going to be another 6-7 million. So again, you don't have to worry about that. We're a small island. We're just not building enough. So yeah, with everything coming, if you're not making money in Birmingham, you want to go to bed and forget about it. It's the best place well, it's been voted the best place in Europe to invest. So hopefully all the things that I've covered earlier on. And one for you, Raj, from Helen. Thanks, Helen. What's your letting services including? What's the management fees and charges? So fees and charges, and what do they get for their fee, Raj?
So we have a special discounted rate for clients of Joseph Mews. So we normally charge 12% plus VAT, but for Joseph Mews clients, we do a deal at 9% plus VAT. What that includes basically a full management service, everything from start to finish, from collecting the keys at handover, doing a snagging inspection, arranging any furniture, finding the tenant, referencing them, doing the tenancy agreement, registering the deposit, handling any maintenance issues, collecting the rent. At the end of the tenancy, checking the tenant out of the property, dealing with any issues at the end. Maybe it needs cleaning. We deduct the cleaning fee from the tenant and get the cleaning sorted, ready for the next tenant. So utility transferring into the tenant's name, basically everything. It covers absolutely everything. So a landlord doesn't have to get involved in anything whatsoever.
Thanks, Raj. Yeah, and we've been working with Raj for, as I say, many, many years. And yeah, and for us, the most important thing is I mentioned at the beginning of the presentation, quality of service. We've had different letting agents come and go, and we've always worked with Raj because he's got the team, he's got the people, he's got the service, so that's important. Another anonymous, thank you. Would I be able to meet a consultant in Birmingham to look around the area where the development will be located? Yeah, 100%. We encourage that, depending where you're based. Come and visit us, meet the team. Our office is in the square where this particular development is, and we can walk you, instead of just showing you pictures, all these areas that I've talked about. We can walk around and show you around the city. We give a guided tour, and that really is an eye opener. Even if I've got a lot of Birmingham investors that don't come into the city very often, and they're really surprised. I can't tell you the change that's happened in the city centre core, apart from what's coming on. So yeah, again, tick a little box at the end on screen, and then we can organise that. Is the property? Yeah. Do we allow short-term lets or holiday lets or serviced accommodation? Not in the St Paul's one. We do in some of the developments, but we kind of limit it just because we sell to investors. We also sell to homeowners, so we like to protect the integrity of the development. So there's not people coming and going and stag do's, hen do's. It's not quite like that, but we just want to protect the integrity of the development. The St Paul's one, for want of a better word, is kind of upmarket. And where I was just saying about, older developments kind of lose their luster. Well, this is an older building, and it's a bit like, the old buildings in Mayfair. They're well looked after, and people still want to be there. So for the 30 St Paul's, we don't allow it. We've got some famous people that have already reserved to live in, and one for investment. Penthouses here as well. So yeah, we just want to keep it a nice either homeowner or long-term lets. So we've got people using Raj that are in for sort of 6 months or 12 months. Luke again, what type of tenant would you typically find in Birmingham? Do you likely see tenants pay up front? Maybe paying a 6 months or 12 months up front. I know I've seen people because I've had stuff, I'll put it on for 2,000. Someone offers me 2,2 because they know it's going to be gone this afternoon. How does that kind of the dynamics work, Raj?
Yeah, so in terms of that question, typical tenant you'll find in Birmingham, it's mostly young professionals. You also get some international students as well. And you've asked about do you likely to see tenants pay up front from guaranteed rent return? So at the moment, international students typically pay up front. That is going to change with the renters reform bill. Tenants aren't going to be allowed to pay rent in advance anymore. So it will just go back to monthly for all tenants. At the moment, what happens a lot is tenants, yes, they do offer over the asking price. Again, that is going to change with the renters reform. You're not going to be able to accept an offer over the asking price. But the flip side to that is what I think we'll find in terms of the change in the rental market is landlords will adapt to that, and they'll think, well, if a tenant can't offer over the asking price and I can't accept rent over the asking price, I'm going to start marketing my apartment higher. And then the next landlord's going to follow that. And all that's going to do is drive rents up more. So I think that will be one of the outcomes of the Renters' Rights Bill. I don't think the government are planning for that to happen, but it will. It is naturally going to happen. That when the government introduced the Tenant Fees Act in 2019, previously agents used to charge tenants an upfront fee for renting a property. Agents weren't allowed to do that, so agents increased their fees to landlords. In turn, landlords increased their rents way beyond, their fee might have increased by 1 or 2% a month, and their rents increased. Sorry, 1 or 2, yeah, their rents increased, 10% a month or more. So, there'll be an unintended consequence that rents go up. Personally, I think that will happen.
Yeah, the demand is there. So if you as a landlord are getting more costs, you're going to put your rents up. It's not like there's a million empty properties. There's nothing. So again, can't stress how important that supply and demand dynamic is. My costs go up. I'm passing it on to you because if you don't want it, I've got 17 other people that do want it. So again, yeah, it's a very strong market. Thanks for that, Raj. I think that's most of the questions. I've just got I think two more slides, and one is interactive that you can ask for anything you need. So for attendees today, there'll be a form to fill in or a box to click, and we'll contact you if you want to find out more about this or other Birmingham developments that we've got. If you're secure before the end of Feb, I'll have a conversation with you first. Then we've got £1,000 towards your legal fees. With the 30 St Paul's, we're launching on the 30th of March. Have we got something on that, Callie? So next slide. There we go. Fantastic. So we've got the grand launch party on the 20th. It's all very secretive, all very Peaky Blinders. But we'll let you know, scan the QR to register, come to the event. If you want to secure something now, you've got the £1,000 towards your legal fees. And we've only, to a couple of high profile existing clients that we talk to regularly, they've reserved a few. So we've got a good choice, full choice more or less of units to go for, the balconies and the terraces, etc. So do let us know. I'm sure we'll invite you to the launch party. Raj will be there as well. You can collar him about the rental market. Next slide, please. Next steps. Next slide, please. You'll be pleased to know this one that comes up will be the last one. There we go. So just click your box. We know who you are. If you'd like myself or one of the team to contact you with current investment opportunities, mortgage options. I think we had someone that wanted mortgage and tax advice. Maybe tick mortgage and tick other, and then we'll get back to you on that. Or if you want to know anything about the UK property market, lettings, if you put other and let us know, then obviously we can pass you across to Raj if it's a lettings or management specific. And again, if you put our current investment opportunities for the lady or gentleman that wanted to come and meet one of the team, see the development and have a tour around the city, that's no problem at all. So just fill in a box or more, and it's 8 o'clock. So I'll probably be contacting you guys tomorrow now. So appreciate your time. Thanks, Raj, for that. Thank you for joining us on both sessions today. Thank everyone else. Thanks for joining us as well. And letting me rant on. And as I say, click the box. We'll be in touch and look forward to seeing you all shortly. Thank you very much.
Thank you, everybody.